Good afternoon. Welcome to GrainTV. It's February 12th, 2014. I'm Logan Burgess. To my right here is Brock Shimano to help break down a negative day for the grains in Chicago. Jumping into the quotes here, we see corn down 1.5 pennies. Soybeans led to the downside, down 12 cents, and Chicago wheat was off 4 1/4. Planting season is just around the corner, and we want to remind you guys we have a great mobile app now available for the iPhone, iPad, Android, or tablet. Visit us over at GrainHedge.com to take a trial, a 2-week trial of that platform right now. Brock, let's jump into these numbers, though, a little bit. We did see soybeans lead to the downside here once again, really at the high side of the recent range, but a lot of weakness, it seemed like, in the soy complex.
You know, I think soybeans really led the other two markets, corn and wheat, to the downside here today. We did see soybeans off about 12 cents on the front month March contract. And I think what really got the selling started there was news out of China that they canceled an export sale to them for 272,000 metric tons in the old crop. But they came back in and bought in the new crop of 240,000 metric tons. So I think that just transferred that sale over to the new crop. We saw a little bit of a divergence between the old crop contracts on the March soybean contract and the new crop November contract. New crop was only down about 4 1/4. So there's quite a bit of difference what was going on in the old crop March contract. Let's take a look at the chart here that we have for March soybeans. You can see the last couple of days we have been a little bit of a consolidation period over the last 4 sessions or so. Today we did end up negative. We went down and tested some support right around that 1323 area. We did test some resistance as well around 1340. You know, that's kind of been the high and the low ends of the range of what we've been printing here lately. But tomorrow, if we don't get an overly bullish report in the export sales report, I think we could fall below the 1323 area, ultimately head down around that $13 area will be the next area of support I'm looking at.
Yeah, you know, if we take a look at corn here in today's action as well, we saw a relatively weak trade for corn. If you take a look at the chart here, this is a daily chart of the March contract for corn. You can see here in the last 2 trade sessions, yesterday the market really tried to push lower and we saw bidders come in. Today was kind of the opposite. The market tried to move higher and we sold off into the close, almost closing at the lows. So it really looks like right now a market that's seeking direction. You know, certainly if you're a corn bull though right now, the reaction today and yesterday is not what you would have liked to seen. Following Monday's USDA report, which surprised traders by lowering U.S. ending stocks of corn for the old crop by 150 million bushels. I think that's a little bit of a cause for concern, but as I said, it does look like right now a market that's looking for direction. We didn't get a lot of direction from the ethanol numbers reported this morning. Take a look here at this chart. This shows weekly production. Are the red bars. The black line here is what we saw last year during this time. And today we saw 902,000 barrels per day reported on average for ethanol production. A little bit of an improvement from what we saw last week. And seasonally, you can see here that we tend to see weekly production improve here really from the middle of January moving into the summer. One thing that may be limiting production on a weekly basis a little bit is the ethanol crush margin right now in Iowa. You can see it's down sharply from where it was back in December, and in large part that has to do with a corn market that has just really marched higher since the January USDA report. But one thing working to offset that a little bit has been a bouncing back DDG market. So bottom line right now, relatively weak margins, but we did see a good week over week ethanol production figure. Like I said, the numbers today, not a lot of direction for the corn market. I think we're going to have to keep an eye on export sales and feed usage here moving forward.
You know, the market does seem like it's moving into a period of where it's searching for a little bit of direction, especially in the corn and soybean markets. Tomorrow we do get the export sales report. I think what we're going to be looking for out of tomorrow's report is confirmation on what we saw out of Monday's USDA WAS report. On Monday, corn export sales anticipated for this year was moved higher by 150 million bushels based on a strong pace of export sales that we've seen to start this marketing year. Soybeans was also moved higher by about 15 million bushels. We should see that pace start to slow off quite a bit heading towards the latter part of this marketing year as Brazilian and South American soybeans in general hit the market. We should see the soybeans start to slow off here a little bit. As far as tomorrow's concerned, if we take a look here at the combined sales that are expected in tomorrow's report, corn, we're looking at another strong figure, 800,000 to 1.2 million metric tons expected sales last week. Soybeans, 600,000 to 950,000 metric tons, and wheat coming in at 450,000 to 750,000 metric tons. And of course, we'll tweet those numbers once they come across the news wires.
That's right. We'll keep you posted there on those numbers tomorrow on GrainTV. As I said at the beginning of the show here, as we move through February, planting season right around the corner here. Visit us at GrainHedge.com to get live quotes from Chicago in the cab of your planter this planting season. We have a great app. It's available on iPhone, iPad, Android, and tablet right now. So as I said, visit us at GrainHedge.com to get started there. Or as always, call the office, 877-472-4607. Thanks a lot for joining us here on a Wednesday. We'll see you tomorrow.